everybody you would need to know if you're looking to buy a house for the first time or buy a property for the first time. We have an amazing slate that I'm happy to introduce. I want to give a quick shout out to our mayoral aide, Michael Hoffman, for all his work on this, as well as our housing justice director, Michelle Tulo. This is, in partnership with the city of Hudson. We want to really pursue people into getting home ownership opportunities. All the information you need to know, one-stop shop here. We have a list of different presenters. Our first being Al Belenchia. He is from Columbia County Habitat for Humanity. Al, I will pass the mic to you. While you get set up, I'll give people a little bit of housekeeping. So there is a section where you can ask questions in the comments. We'll be monitoring them to answer questions at the end. If you have a specific question for a specific presenter, just let us know in the comments and we'll get that question to them to be answered at the end of the presentation. So Al from Habitat, you there.
I am ready to share my screen. Okay, here we go. Can everyone see that? Okay. All right, excellent, thank you. Thanks, Mayor, thanks, Michelle. Thanks to the rest of the gang of panelists here. It's been fun preparing for this, and I appreciate everyone who's coming to learn about one of the most important factors of life, which is the place that you call home. I'm happy to introduce Habitat to you all, either for the first time or to reintroduce Habitat. We are closing on some projects that we have finished over the last couple of years, and we're planning to build again. So this is a perfect opportunity for us to talk about who we are, how we work, and what the opportunity for low-income folks is to build and own a house through Habitat. So, we're going to give you some basic information to get you ready for when we begin the process later this spring. I just want to start by saying that Habitat is not your typical housing developer. So bear that in mind, and I'll explain why that is. So we work with people who have a housing problem. And I'm sure many of the people listening here fall into one of these categories. You're either paying too much for your rent, the low income, the affordable income guidelines are no one should pay more than 30% of their income towards housing. So if you're paying more than that, then you're paying too much for rent. You're dealing with an unreliable, at the least, landlord or landlords who don't give you services or don't provide you what you need to make your home safe and decent. You want to own your own home and understand that getting on the path to ownership is an opportunity to build wealth that you can pass on to the next generation. And you qualify a mortgage, but you don't have enough to purchase a home that is affordable for you or meets your family's need. So if any of these are the cases, then you could qualify for partnership with Habitat. We know that there's an affordable housing crisis around the country, and certainly in this county, and certainly in Hudson. This is not a this is not a current stat. It's probably a year old, but at least 20% of folks in New York State pay more than half of their income for housing. And so, on a rental basis, that means, the wage required to afford a market rent apartment in the state of New York is $70,000. And that's just unaffordable for most of the working folks in this county and in this city. But Habitat can help. We have built 25 houses over the last, since 1993, and put families in those houses at a cost that correlates to their income. No Habitat family pays more than 30% of income for the house that we build with them. So what we offer to our families who we partner with is a house payment that is affordable by government standards, a homebuyer education process that gets you ready to become a homeowner and gives you the financial education that you need, as well as the background to successfully own and maintain your home. We help you every step of the way. We are a true partner. We're not just a developer that hands you the keys and walks away. And we provide our families with a safe, affordable home that they can call their own because you own it. It's not a rental. So how do you become eligible for a Habitat home? The income guidelines depend on your family size. For a family of 4 in Columbia County, that means an income level between $24,000 and $66,000 based on last year's income statistics. And again, no Habitat family pays more than 30% of their income for housing. So we price the house and structure the payments for the house so that it will never exceed 30% of your income. That makes it affordable. And you own your own home. So what do you need to do to get a Habitat house or become eligible? It's really 3 very simple basic criteria. You need to demonstrate that you have a need for housing. And I'll explain each of these. You have to demonstrate that you have the ability to pay for housing, that you have income to carry a mortgage. And you have to be willing to partner with us to build your home. The way Habitat works is that we have volunteers and construction professionals who work alongside our families to construct their homes from the ground up. And it's a community process. And again, we have built 25 houses this way, built a rehab, 25 houses this way since our founding in the 1990s. So the need for housing as we define it is one or more of the following. You have an unaffordable rent, that you're living in substandard housing, it's poorly made, it's run down, it's unhealthy, or it's inadequate. You have a 5-member family and you have 1 bedroom or 2 bedrooms. That you're living in housing that's inaccessible if you are living with a disability or have a family member who's disabled. If your home has been damaged by a natural disaster, or if it becomes unlivable, or if you need a different type of shelter than you're currently in. All those demonstrate the need for housing. The ability to pay is that you need to have a steady income because you will become a homeowner and you will need to take out a mortgage. We will work with you to find the right mortgage for you. You have to have decent credit. We will work with you, and we work with some of our families for a period of time to get their credit in line so that they can qualify for a mortgage. So it is a process. And you have to be able to qualify for a mortgage with a licensed lending institution. And we work with partners who specialize in working with Habitat family and in providing lending opportunities for habitats. We work with both private lenders and with government lenders. And so we have a variety of options that we will match our prospective families with to find the right mortgage. The willingness to partner includes the 8 hours of homebuyer education. Most of our families go through more. We are developing more education products and services through a new service initiative that we are developing. And you have to contribute at least 300 hours as a family to building your home, is what we call sweat equity. we'll teach you how to build a home. We'll teach you how to drive nails. We'll teach you how plumbing works and how heating systems work. So you'll be ready to own your home. You'll understand what owning a home means before you ever turn the key in the lock. So how do we do this and why do we do this? And it's the mission of Habitat. Habitat was founded in 1975 and has been building millions of homes over since that period of time, not only in New York and in the United States, but all over the world. And Habitat believes that every human being deserves a decent place to live. And we bring people together as a community to build homes and provide safe, affordable, decent housing and hope for those who have been left out of the ability to get a decent place to live. This year, we are, as an organization, we are committing ourselves to building more. As I said, we were in the process of closing on our most recent construction projects and putting families in them. And as soon as that concludes this spring, we will be preparing to open our process and our applications to ask new families to join us in partnership. We have one building site already secured, and we're working on others. But we will open up the application process later this year to allow people to apply without having to commit to a specific site, because we are intending to increase the number of homes we build over the next several years. And we're talking with a variety of communities and others who have opportunities for us to build on certain sites. So we are committed to, as an organization, to provide more homes for people to purchase than we have in the past. We are also, while we're in the process of building launching next week a new program for people who already own their homes and low-income folks who are having trouble maintaining their homes. You have to be a homeowner, and we will be choosing, we'll be opening applications for this Helping Hands program, which is designed to provide minor repair services and support services to low-income and elderly homeowners in this county. More information will be released next week. If you would like information, you can email admin, ADMIN, at columbiacountyhabitat.org for more information, or watch our website, which is www.columbiacountyhabitat.org, when we release information next Tuesday. So stay tuned for that. There are many ways to get involved in Habitat. For those of you who are not necessarily interested in owning a home through our program, you can refer other people who might be eligible. Send them to our website. Our application process will open later this spring, but we are taking names and contact information to alert people when that application process begins. You can also sign up to volunteer. You can sign up to volunteer to help do home repairs and home building, to work in our restore, to work in our offices. We thrive, and our model works because of the volunteers who have worked with us over nearly 30 years. And certainly we're looking for more partners for our Helping Hands program to provide a greater range of services for the county's low-income homeowners. It's a process that we're already developing partnerships with and getting funding for a number of county organizations. So we're going to be able to start this program from a position of strength and be able to help people as quickly as they apply for help. Again, for more information, you can find us online at columbiacountyhabitat.org. You can call our office at 518-828-0892, or again, email admin at columbiacountyhabitat.org. and someone will get back to you. It may even be me if I'm not traveling. I look forward to speaking with you, and I'm ready to hand over the screen to Next. And that you, Zach?
All right.
That would be me. Al, thank you so much for all
It
that.
is.
So really appreciate it. Can you guys see the screen? Yep, great, awesome. Well, Kamal, thank you first. I just really want to say thank you for helping us put all this together. Al, like I said, great presentation. Thank you for all that great info. And thank you for everyone for taking the time this evening to meet and talk about homeownership. I'm so psyched to be a part of such an amazing group of individuals, and I'm grateful for the opportunity to share all this info with you. What I'd like to be sharing today and covering is touching just base on the Petrarca Properties team and who we are. I'll then share a little bit about previous market conditions this past year, where we currently stand in the current real estate market, and then what projections or experts are projecting for the future market. I'll then finish with the home buying process in 10 steps. So I'm Zachary Petrarca. I'm the founder and team leader of the Petrarca Properties team at Coldwell Banker Village Green Realty. I've been licensed for about 2 years now and have prior experience flipping homes before then. In the past 8 months alone, I've helped over 27 families buy or sell their home, and a number of them being first-time home buyers. I specialize in buying and selling residential properties in Greene, Columbia, and Ulster counties. I also cover a bit of Northern Dutchess as well. So here at Petrarca Properties team at Coldwell Banker Village Green Realty, we are a full concierge team. And what that means is we have the ability to help any level buyer or seller with any type of property throughout the entire process and beyond, from start to finish, and whatever else you need, resources, connections, all those good things. So here are just a few of my clients that I've helped in the past 8 months and their experience with working with me. You can find more reviews on Google or on my website, which I'll share at the end. So you'll be able to get a little bit more information about those that I've worked with and their experience. Oh. But I'd like to spend a little bit of time going into the real estate market and chat about 2021's market, the predictions for the future market. So we'll dive a little bit into that now. So 2021 and even 2022 were real estate markets for the history books. We've all heard those headlines being thrown around in the news and word of mouth. Existing home sales hit their highest level in 15 years. Sales prices reached new heights and inventory hit rock bottom last year. Homes often sold in record time and often for well above asking price. And the chart to the left shows the median sales price for homes in Greene County and Columbia counties over the past 2 years, which you can see the substantial increase of $100,000, which is a substantial equity growth and price appreciation growth for this area, but in general over a 2-year span. So knowing that, where is the real estate market heading? So we anticipate many of the housing market trends of 2021 will continue into 2022, but just at a bit more of a moderate level. So there still will be strong buyer demand and inventory shortages to persist this year and going into next year. Home sales are projected to remain strong, but will be tempered by the limited supply of homes and higher sales prices. And what we're talking about is rising interest rates. And price growth is expected to slow somewhat as a result, but affordability will likely remain a top constraint for some home buyers and especially first-time home buyers. So let's chat a little bit about affordability and what that means for a first-time home buyer. So interest rates are one of the levers that affect a buyer's affordability. On this chart, you'll see interest rates on the left in the orange and home loan amounts at the top in the blue. So last year, we saw interest rates around 2.75%, which is extremely low. And as you can see, for every 1% increase in rates, your affordability decreases by 10%. Meaning, if you only qualified for a maximum home loan of $300,000 last year at a 2.75% interest rate, This year, with the projected higher interest rates, you may only qualify for a $270,000 loan instead. So with that being said, where are interest rates heading? So rates have been increasing week over week lately, and this chart shows a prediction of where interest rates will be this year, or what experts predict. I believe that it may be increasing a little bit faster, and we may see it come Q4 and end of this year a bit higher and closer to 4%. But another lever that I want to chat about other than interest rates is inflation. So real estate is one of the time-honored inflation hedges. More specifically, as prices rise, so do property values. So this chart shows inflation in blue and home price appreciation in orange. So as you can see, as inflation decreases, so does property values, and as it increases, so do property values. And with how much money that has been printed over the past 2 years, experts believe this is only the beginning of the inflated dollar. So with all this being said, where are home prices projected to be this year? On average, experts predict a 5.1 appreciation on home values this year. I believe home price appreciation locally in our area will be a bit higher than 5.1%. However, for this example, if you purchase a $300,000 property today, by the end of 2022, at a 5.1 appreciation rate, you would gain $15,300 of equity. But in other words, if you wait, that $300,000 property is also going to be worth $315,000 at the end of this year or next year, as an example. So what's the cost of waiting? So while it's true home prices and mortgage rates are rising, so are monthly rents. So this chart shows monthly rent increases year over year. And I'm sure you've all seen rent prices increase or seen the rates lately. And they have jumped 9 to 12% in the past year alone. And as a prospective buyer, rising rates and prices shouldn't be enough to keep you on the sideline. So as the chart previously shows, rents are skyrocketing. The big difference is when you rent, that rising cost benefits your landlord's investment strategy, but it doesn't deliver any sort of return for you. But in contrast, when you buy a home, your monthly mortgage payment serves as a form of forced savings. Over time, as you pay down your loan and as home values rise, you're building equity, and by extension, your own net worth. Not to mention, you'll lock in that mortgage payment for the duration of your loan, which is typically 15 to, if not more so, 30 years, and give yourself a stable and reliable monthly payment. So let's go step by step on how we can purchase that first home. So if you can, the QR code on the bottom right will actually bring you to a free buyer's guide that I put together for you all, and you can download that or use it to reference later. You can also find it on my website. If you'd like, I can also email it to you. If you prefer that, just shoot me a message after the workshop. So the first step is to hire the right real estate agent. So how do you know who is right? So it should be someone you naturally trust, someone who is knowledgeable about the local market, has connections and resources they can provide, and are willing to go above and beyond to help you reach your goals. Because in this market, you need someone who's going to go above and beyond. A listing agent versus a buyer's agent. So a listing agent or seller's agent has an allegiance to their sellers. Their goal is to get top dollar for the home. But a buyer's agent's fiduciary responsibility is to represent that buyer and to ensure that their interests are protected. So as a buyer's agent, we provide information relating to value and the market neighborhood's condition and obvious defects or red flags with the home. We negotiate repairs and pricing on your behalf, and we use knowledge and experience to navigate you through all the real estate paperwork. Step 2 is to review your credit score and begin compiling your documentation for your lender. Now, you can do this after speaking with your lender, but I recommend taking a look at your credit score, creating a digital file on your computer where you can store and easily share recent pay stubs, bank statements, and your past 2 years of tax returns. And I know your lender will probably thank you, and they will definitely be asking for these things. So with that being said, step 3 would be getting pre-approved with a local and trusted lender. They will help you determine how much home you actually can afford and pre-approve you based on the information and documentation that you provide. This step is crucial before you begin searching and touring homes. Step 4 is to begin your initial research. What neighborhood do you want to be in? What are the 3 to 5 must-have features in your next home or your first home or neighborhood? What are 3 to 5 things that the home must not have? Now knowing how much home you can afford, you can speak with your trusted agent regarding your preferences and must-haves to determine what needs to be done to make that happen. Step 5 would be to begin touring homes. And once you find that top pick, you can then make an offer. The seller can either accept the offer, make a counter offer, or decline the offer. In this market, there are many different strategies that can be done to incentivize the sellers to accept your offer, especially if we find ourselves in a multiple offer situation. There are also strategies, however, that can be taken to find homes that are not in multiple offer situations. So I advise speaking with an agent and finding the strategies that are aligned with your goals. And once the seller accepts your offer, you can move into step 6, which is ordering the inspection. 10 times out of 10, there will more likely be things that'll come up on the inspection report. From an accepted offer to concluding the inspections, it typically takes about 7 to 14 days. Once the inspection report is back in, we can move on to step 7, and that's negotiating the offer after inspections. From this point, you can either not sweat the small stuff, you can negotiate repairs, a credit maybe, or a mixture of the 3. If in the end you decide you prefer to walk away from the deal, that could be another option as well. But it's important that the offer you originally made is contingent upon the inspection. This will provide you that option to negotiate or walk away if needed. And once we come to an agreement after the inspections, we move on to step 8, and that's reviewing and signing the official contract. This is where your attorney will begin to get involved. From this point to close, you can expect a timeline of roughly 45 to 60 days. So what happens once you're in contract? Once you go into contract, you would put down that official deposit, which would then be held by the seller's attorney. Your lender will begin finalizing processing your loan, and you'll review and sign a bunch of different disclosures for the real estate transaction. Your attorney will then order a title search on the property to make sure that the property is clean and free of any liens. Your lender will also order an appraisal for the property to make sure that the property meets the accepted value. And assuming the appraisal comes in at value, the lender will then begin underwriting your mortgage and finalizing it so that way you can close on the home and move in. And then once all conditions are met, you'll sign all those loan and title documents, and we'll schedule that closing for you to be able to transfer keys and possession of the property. Step 9 would be to begin scheduling your move. So once we begin satisfying all of those deadlines and contingencies in the contract, we can begin following the steps needed to make a smooth transition into your new home. I have a full detailed list of these items to keep track for you, which could be found in my free buyer's guide. And I can also email that as well if you reach out. And so the final step is step 10, and it's closing day. It's the most exciting day of the entire process. This is the day you sign all the paperwork and get the keys to your new home. 24 hours before closing, we would schedule a final walkthrough. And during the final walkthrough, we make sure that any negotiated repairs are completed and the home is the way it was when we entered contract. We'll do a once over of all the appliances and HVAC, plumbing, heating, electric, et cetera, to make sure that everything's working. And again, what it was when you originally went into contract on the property. When you go to closing, you'll need to bring certain documentation. This typically consists of your photo ID and any outstanding documents, which would be requested by your attorney or lender, and a certified cashier's check. And don't worry, most of the time, or not most of the time, I would definitely provide you this information. Your attorney would, your lender would, so you'd be able to know exactly what you need to bring for your closing. And once all paperwork is signed, funds are distributed and keys are handed over to you, the buyer, and you're all set to move into your next home. So Thank you all for your time and attention this evening. I'm so grateful for the opportunity to speak with you all. I'd love to stay in touch. So make sure to follow me on social media. I'm on all the platforms. I also started a podcast called The Daily Design. So you can also tune in on Spotify, YouTube, and Apple Podcasts there. Also, feel free to scan the QR code on the screen where you can access my buyer frequently asked questions. You can also find that on my website, zacharypetroka.com. So without further more, I'll pass the torch over to the amazing Laura Starker and Caitlin.
I think we can't really hear you yet. You might want to check your audio, Laura. While we do that, I'll remind anyone watching, feel free to comment any questions on the Facebook Live or the YouTube stream. We will be checking the comments and answering your questions at the end of the broadcast. Laura, we still can't hear you. You look like you're saying amazing things, but all right, should we come back to you, Laura, while you figure out your audio? Yeah, let's do that. We'll come back to you, Laura, while you figure out your audio. I will pass the mic to a good friend, Kevin Maxwell, who will be presenting
you,
from
Kamal.
Maxwell Home and Inspections.
All right. Well, I got to say, so far, this has been really good. I've learned a lot myself about the different programs and stuff. Oh, Laura, are you jumping on? All right, we're good. All right. So, yeah, so I was going to say, so I've learned a lot tonight so far in regards to like everything about the process of Habitat for Humanity, as well as like even real estate. I like to think that I know a lot about real estate because I'm kind of in it, not a realtor, but a home inspector. But I got to say, so far, so good as far as for everything. And I got to say, thank you, Kamal, for organizing this event. It's been awesome so far. So we'll jump in. I'll share my screen. Okay. So I'm Kevin Maxwell with Maxwell Home Inspections. Are we good? Can everyone hear me? All right, we're good. All right. So I like to kind of like, I like to do this as more of a conversation. So for me, I'm going to be going through my PowerPoint and kind of going through the slides, but I'm going to be more talking and kind of like, you know, I don't expect you to say anything back to me because obviously I'm the one talking. But if you have any questions about anything, feel free to kind of drop them in the Facebook Live chat. And then obviously I'll answer it after, as well as if you have anything that you wanted to reach out, feel free to also, you know, follow me on social media, Maxwell Home Inspections. We can talk further. So I'm going to kind of dive in. And I'm going to just kind of start going. So let's go. Let's see. Okay. So I am Kevin Maxwell. So I am actually a Hudson native. So I was born and raised in Hudson, New York. It's kind of crazy to say that now because the illustrious Hudson is is booming. So, but I am a Hudson native. And I actually, I worked for the city of Albany as a code enforcement official or a building inspector. So that's kind of where my career started as far as for home inspections, and my love for homes kind of began. So, you know, while I worked as a building inspector, you know, we basically manned buildings being built, buildings being knocked down, and kind of everything in between. So I had the opportunity or the pleasure to be able to see houses be constructed and to see them kind of like, you know, on the way out. But it gave me a unique perspective as far as for, you know, properties, right? And it gave me somewhat of a little bit more of an interest for it as well. So for me, working for the city was great, but I always liked the customer service aspect of the home inspection process or the home process. And then, my boss, Rick LaJoy at the time, he actually took me on a home inspection and I kind of fell in love with it. So ever since then, that's when I started my business. And then I ended up kind of like doing on the side. And then things kind of blew up enough to where, I was able to leave my job with the city of Albany and then start this. So that's kind of the start of that right there. And that kind of gives you a little bit of a little, on the slide where it gives you a little bit of an understanding of kind of like how I was kind of started and everything like that. But moving forward, so this is my team. So we've added a lot more new team members. So this is my senior inspector, Mo Khalil, and then my other inspector, Scott Colehammer, and then my sewer scope tech / who does everything, Adolfo. And then we have some new team members, Jordan, Charles, Sean. So we're up to basically 6 inspectors. I'd like to say we're pretty much one of the leading home inspection companies in the Hudson Valley area, as well as the Capital Region, in addition to Shield Guard home inspections. So we're kind of leading the pack here with that. And we'll kind of go a little bit further as far as for kind of what we offer and what makes us a little different than, other people or other inspection firms. So as far as for a home inspection, the question is, what is a home inspection, right? Because some people, they have a little different opinions. Some people think a home inspection is an appraisal. Some people think a home inspection is like Mike Holmes, where you're like punching in a sheetrock and like destroying the house to find stuff. Simply put, a home inspection is a non-invasive visual inspection of the home, to where you're basically hiring a licensed and certified and insured inspector that's knowledgeable and experienced in buildings or construction science to basically inspect your house. So for me, the biggest thing I tell people is this, is especially in this market, you want to always get a home inspection, not because I'm getting paid, right, for me to say that, but even for me as a home inspector, when I have bought, other houses, I've had somebody else kind of tag along with me, because a lot of times when you're buying a house, as Zach will tell you, the process moves very fast. So the thing about it is that if we're talking about a fast moving process, when you're buying a home, you want to be able to have someone who's non-biased and somebody who this is what they do every day. They go to a house, they check it out, and then give you their opinion, and they can also educate you on your purchase. So for me, as far as for my job, I look at myself as a professor or as an educator. Some people, they don't see themselves as that. Like they see themselves as, prior contractors, and they're kind of like destroying the house in terms of like verbally. But for me, it's really about educating you as a buyer to make sure you're making an informed decision. I'm never going to tell somebody you shouldn't buy a house, or you should buy the house. All I'm going to do is tell you the facts and tell you, hey, look, maybe the foundation needs some work. Maybe the roof needs to be replaced. Take all that into consideration when you're buying the house to make sure that you're not going to be hitting with any surprises. So for me, I always want to make sure that people don't have any surprises when they're buying a house, because especially in this market, that we're in, kind of skipping through some slides, but as far as for this market we're in, especially with us going into spring, people are waiving inspections, which I don't usually agree with that, unless you have like, a certain amount of cash reserves, but if you're a first-time home buyer, a lot of times, and this is kind of more for like Laura to talk about, as well as for Zach, but a lot of times when you're buying a house the first time, funds are kind of limited, so for me, people think, oh, well, should I spend the $400 or $500 on an inspection if funds are tight? And I always say yes, because for me as a home inspector, I've done at this point over 1,000 inspections myself personally, as well as my team has done them as well. And, the biggest thing that we always see is when we do an inspection on a house, a lot of times people think that the house is fine, it's perfect, there's no issues. But then as we start kind of digging into the house and we start kind of looking to all the different cracks and crevices, we start finding stuff. You know what I mean? Whether it's a roof leak or mold in the attic or asbestos in the basement, the list can kind of go on as far as for the issues that you can find. So for me, it's really being able to kind of verbalize that to the client, or you as the buyer, right? So the next thing to also mention is this, is not all home inspection companies are the same. So some people think that, you can kind of just close your eyes and just kind of throw a dart and hit and pick anybody you want. But for me, I always tell people that you want to choose somebody, like Zach said earlier, that is very credible. So you want to look at the reviews. We have over 300 reviews collectively. So that just means that, we've been doing it for a while, as well as we've been doing it really good for a while. You know what I mean? Because we've been consistent. So for me, it's the reviews, but it's also what do you bring to the table? Because a lot of times in the real estate contracts, it basically says, you want to get a home inspection, which we call in the contract, it usually says a structural inspection. Then you want to have a pest inspection. You want to get radon. So there's a lot of different things that you want to get done, or you should get done when you're buying a house. But the thing about it is that a lot of times you may not know that. So it's kind of between, working with a really trusted agent like Zach, or as well as, working with us for us to tell you what you need. Because like for me, like my team, so we have a team of basically 6 inspectors, and then we also have a director of operations, and then we have an office manager. So, my staff is trained to be able to look up each property individually and actually say, hey, you should probably get a chimney inspection done, which is called a level 2 inspection. You should probably get a chimney cleaning. You should have a septic inspection. So we're really verbalizing that to, you as the client, to let you know what you need, because every system, especially like a chimney, if a chimney is not really inspected and then you want to go burn wood and then you find out the chimney is damaged, it could cost you thousands of dollars to be able to actually get the chimney up to code or up to good standings, as well as a septic tank could be tens of thousands of dollars. So for us, my biggest why is to make sure that every buyer of a house, even a seller too, because we do pre-listings, but every buyer of a house is fully educated, because, we never want anybody walk in the house and then they maxed out their budget because they kind of like went a little too hard on terms of the offer to be, the highest bid. And then, you're maxed out, and then you buy the house, and then, things start kind of breaking and you didn't know they were breaking, or you can't afford it. Right. So I think really holistically, as far as for us, on my side of things, it's really just making sure that, in terms of the lineage of this conversation, like from Al speaking about habitat and having, having the percentages of income to make sure that if you're lower income, you can afford to buy a house. And then from Zach speaking about, making sure that, maybe you put the right you put the right offer in, as well as you kind of follow the steps. For me, it's just really making sure that as you've kind of progressed from, talking to your loan officer, talking to Zach, which is a realtor, and then kind of working your way down to me as the inspector, making sure that you understand that, when we do the inspection, the house isn't your house yet. So the problems aren't your problems yet. That's the key word. But after you get the keys, that's when anything that comes along with the house, the good, the bad, and the ugly, is all yours. So it's just making sure that, we understand that everything is good, because homeownership is wonderful when it's wonderful. But then, when certain things arise, if you're not prepared for them and they surprise you, then it's not as fun. So that's basically, what our job is as a home inspection firm. So if you have any questions for me in regards to the home inspection process, or really anything, feel free to go to maxwellhomeinspections.com. I have a 30-day home inspector bootcamp course with 30 videos of me basically talking about different topics that are really important and essential for a buyer, as well as I also have 2 free ebooks that I've written personally myself to make sure that you can have the education you need before you get into the process, as well as after you finish the process. So I'm all set. So thanks, guys. I appreciate the time, and we'll pass the mic on to the next person.
Thank you, Kev. Amazing presentation. I believe that Laura's audio is corrected now. Give me a test there, Laura.
Oh no, can you hear me now?
I still can't hear you. Oh, there you are. Yes.
Oh, see? Okay, thank you, Anand.
We can hear you.
Kevin. Okay, so wait, I got a screen share. I'm so not good at this. I need Zach just to be here, just so he's such a better techie person than I am. So anyway, I hope you can all hear me. My name is Laura Starker, and with me is my colleague, Caitlin Kipp. We work for a company called Guaranteed Rate. I have originated mortgages for about 16 years. Yes, I am very old, Caitlin and I are both licensed originators, and we can originate a loan in New York State. Our office is right in Hudson, New York, so we are local. Caitlin lives over in Greene County, and I live in Columbia. So I'm going to do a quick overview for first-time home buyers of the mortgage process, the different mortgages that are available, and we're going to touch lightly on some credit and what credit is and how to get healthy credit. That's a good way of putting it. So that is me, and this is the steps of the mortgage process and the lender role. Caitlin and I both will take an application. We will look at interest rates, and we look at different loan programs. We will order an appraisal. We do collect income documentation, asset documentation. We work with your attorney to pull title. We do submit a file to underwriting. The job of an underwriter is to give formal mortgage commitment or mortgage approval, which means at the closing table, you will get that mortgage. Her job or his job as an underwriter is to make sure we're staying and we are complying with whatever loan program you're going into, those guidelines. We do submit conditions, and we do help a borrower go to closing. A pre-approval, what is a pre-approval? So a pre-approval is, we're going to look at credit, we're going to look at your income, and we're going to look at your assets. So our job is to really make sure that whatever loan program you're going to go into, you qualify for that. We also can run automated underwriting for our pre-approval process, which means if you're going into FHA, you qualify for FHA, or you qualify for conventional, or you qualify for USDA or VA. The next slide is, I love this slide, actually. I think there are a variety of mortgage products out there. Fannie and Freddie will follow 4 of them, which is conventional, FHA, VA, or USDA. So there are other first-time home buyer options out there. There is also Sunny Mae, which is the State of New York Mortgage Authority. That loan is originated by a New York bank. And there might be different credit unions that have different first-time home buyers. These are the 4 that are available to first-time home buyers. If you're looking for a conventional loan, the conventional loan payment is 5%. However, there is a 3% product out there. It is income qualifying. So let's say you want to purchase a property in Troy, New York. You can go on, or I can go on as your originator and type into the map the property address, and it's going to tell me the median income limit. If you're below that, you can qualify for the 3% product. The loan that I originate the most is the FHA. FHA has a hard and fast 3.5% down. That down payment can come from gift funds. You can pull from a 401k, a deferred comp. The down payment cannot be cash. Same with VA, VA has no down payment, and USDA has no down payment. However, that doesn't mean that you're not going to write checks along the way. As Zach stated, or he might have stated in this presentation, you do have to write a 1% earnest money check. You also have to write an appraisal check. If you're going to do a home inspection, which I always encourage, you're going to write a check directly to Kevin. And then you also have your appraisal. But they're minimal for VA and USDA. And you can't get the home inspection check back, but you can get some of your other checks back for both of those government loans. The minimum credit score, and it is different for every lender, but traditionally 680 is our minimum score. We also have FHA, we can lend to 580. There are guidelines that we have to follow for that. VA, 580 as well, and USDA is a hard 620. That is the most difficult loan that I usually originate. There are 2 USDA loans, and it's very important to let people know this. There's the USDA Direct and the USDA Guaranteed. The USDA Direct, a lender can originate. The USDA Guaranteed, a lender can originate. The USDA Direct, the only people that originate that loan are the USDA, and they have an office in Syracuse, New York. I did put this slide up if anyone's on this call and you want to take a picture. The USDA Direct, and I know Al works very closely, Habitat for Humanity work very closely with the USDA Direct. They will assist low to very low income applicants. They also have payment assistance. So they're a great resource. This is their website. Their website is open to the public. You can go in if you want to know if a property is eligible for either the guaranteed, which I originate, or the direct. You can go on this website and pop in the property address. It's going to bring you to their map and it's going to tell you. The same thing with income eligibility. You can go in, you can put in your income. If you're going to try that, we use gross income numbers. So you want to do that, and you can answer the questions that the USDA has. The next slide is a really important one, is understanding credit. I get a lot of people that I speak to on the phone that will say to me, my Credit Karma score, or I have a Capital One credit card and this is my credit score. When you're applying for a mortgage, same thing with Al and Habitat for Humanity, same thing with USDA Direct, we're going to pull from a mortgage repository. So we are looking for your payment history. We're looking for the credit score is going to be score harder. We are looking for any derogatory. Have you had a bankruptcy? Have you had a foreclosure? Do you have things in collection? And I do agree with Zach. If you need to get started and you don't know what your credit is, give us a call. We will have our contact information at the end of our presentation, and we can pull it for you. The little portion, the credit score factors, to me is crucial. Look at your 35% of skewing for mortgages. We look at 35% of payment history and 30% of amount owed. So a lot of times people say, oh, I was just late on my credit card, I forgot to pay it. Don't do that if you're trying to apply for a mortgage. Your scores are going to go down. And also, if you have a $500 limit on a credit card, keep your limits below 50%, 20 to 30% is actually better. If you can, it's really helpful. Caitlin loves her little curtain slide. I just have to point this out. She's very excited about that. Here are credit do's and don'ts. You need to stay current on existing accounts. If you missed a payment and you're trying to apply for a mortgage and your credit is dropped 100 points, you need to make sure you stay current and wait a few months. Try to maintain your credit card balances to 20 and 30%. If you need us to pull your credit to determine where you are, we are happy to do that, and we are happy to share the report. Some don'ts is don't overcharge on your credit cards. Some people will charge up the card. We just came off of the holidays, and all of a sudden an annual fee comes due, and now they're over the limit. If you're over the limit, even by $5, it's going to affect your credit. And once again, please don't miss any payments. A couple of things to talk about for down payment. This is a question that we get all the time. FHA, 3.5% down. And you might, if you go USDA, you might need some help with your appraisal, your home inspection fee, your earnest money deposit check. That's all acceptable. You can get gift funds. A family member can say, I'm going to help you out. I'll give you an early birthday present. I'll give you an early holiday present. There you go. They need to write you a check. So gift funds need to be sourced. That is something that is the hardest part of my job. So, a borrower shows up and shows me a $5,000 cash deposit. Well, guess what? We can't use cash. We can't source where it came from. But if a family member writes you a check, we get a copy of the canceled check, we get proof of donorability, we get your bank statement, we're good. Other sources of assets and down payment, any checking account that you have, any savings account that you have, we do need to see actual statements. And then the other box here is unsourced or unidentifiable deposits, not allowed. So if someone says, I'm going to give you cash, turn right around and say, you need to deposit the cash, please write me a check. It's just so much easier. You can pull from a 401k. You can take out a 401k loan, perfectly acceptable. We just need to know the terms and the conditions of the loan. And then lastly, especially for your government loans, your USDA, your VA, your FHA, you can conventionally get a seller's concession. A seller's concession is you will take a portion of your closing costs and some of your prepaids and roll them into your mortgage. With each loan program, there's a limit on how much you can do. So if you want, we can talk about that. But that is a way to diminish the cash that you need for closing. So and I think Zach talked on this as well. Normally what lenders want. So we usually see 2 years W-2s. It's very important to have 2 years of job history. It doesn't have to be the same job. You could have moved jobs. We work off of guaranteed hours. We try not to have any gaps in employment history, and you will hear something called, I need a letter of explanation. So we need to do, for 2 years, where have you worked? And we verify all of that. We always collect 2 most recent pay stubs, and we will collect that throughout the mortgage process. And traditionally, we will collect 2 years tax returns, business and personal. Every once in a while, it will come up that we will have a regular return, or you might need a 1-year return, and therefore we only need that. We need to collect 2 most recent bank statements, all pages, and any entire retirement or investment accounts. So this is our contact information. There's our beautiful picture. We are Mortgages by Laura and Caitlin on Instagram. We sometimes can be quite humorous on our Instagram. So we do ask anybody to, Kevin is laughing at me, I can see him. We do ask anyone who would like to follow us. If you have any questions at all, you may reach out to us on our email, on our Facebook, clearly our Instagram. We are sometimes funny, and that is our phone number. And I'm happy to answer any questions that you may have. And I really appreciate you all taking the time and talking to us. And I am going to stop sharing, as Caitlin just told me, and I'm going to bring this back to the mayor, and I think he's going to introduce Anand. I'm not good at this. Bye, everyone.
Yes. And I am a big fan of you guys' Instagram. So now I'll pass it to our last presenter, Anand Balasar from Metswood Insurance. Another reminder, we will be answering all questions in the chat at the end during the Q&A. So keep those questions coming. I see a lively discussion going on in the chat.
Right.
Anand, the floor is all yours.
Thank you, Mayor. I'm Anand Balasar, as they mentioned. I'm with Metswood Insurance, and I'll be addressing some of the insurance questions you may have during the home buying process. I've heard from a lot of incredibly knowledgeable and talented people here tonight, and I hope to continue that trend by providing you some advice and information to ease the stresses involved in purchasing a home. Here's a little bit about me and my role at Metswood. I focus on building and maintaining relationships with our professionals in the home buying process, like the extremely talented folks on the webinar today. Outside work, my wife and I enjoy golf with our 8-year-old, Ava, and we like traveling whenever time permits. Doesn't happen very often. Before we get into the specifics of homeowners insurance or insurance in general, let's address the first question that most people have, which is, why do I need insurance? Firstly, for most, a home is the biggest asset you'll purchase. Ensuring that you could replace or repair it if something catastrophic happens is one of the biggest reasons that insurance exists. Homeowners insurance is your security blanket to protect you and your family in the event of a catastrophe. The second reason, and the most logical reason, is because the mortgage companies require it. Mortgage companies are trusting that you will take care of your home and they require that you insure it so they can be made whole if something happens to your home. Following the sequence of events that happen during the purchasing process, let's talk about when you need to start looking for homeowners insurance. One way to remember this is to keep in mind that you will need active coverage on the day that you close on your home. Talk to your realtor or mortgage lender about the insurance process early, and they can make recommendations if you currently don't work with an agent. Some first-time home buyers get their current auto insurance company for coverage, but it's not always the best idea. There's a lot that goes into finding the right coverage for your home in your specific circumstances, and those companies may not have the right products to cover your home. It could take some time to find the right coverage that fits your budget, so it's a good rule of thumb to start looking as soon as you find a home that you want and you're qualified for a mortgage. The sooner you reach out to an insurance agent, the sooner they'll be able to find you the coverage you need for your future home. Well, there are many, many choices available out there when you're shopping for homeowners insurance. A great way to not get lost in the weeds when starting the search is to keep the above questions in mind and figure out what is important to you. Do you want to work with an agent that has access to many carriers? Is it important to you that your insurance agency gives back to the community? Do you want personalized service, or are you comfortable handling things online? My non-biased advice is to find an agency that fits what you need. Having access to many insurance carriers that offer similar coverages but at different premiums can make a huge difference to some individuals. Independent agencies, they give you the best of all worlds, and they know your community the best. Ask your realtor, your mortgage lender, or home inspector even for recommendations. They sometimes work with several agencies and can help you get the process started a lot easier. Well, now that we've addressed the why and the how, let's talk about what homeowners insurance covers and what it does not. There are two major parts of homeowners insurance: property coverage and liability coverage. Property coverage is pretty straightforward. It is coverage for your home and your belongings. Liability coverage, on the other hand, is legal protection for you and your household if a member of your household causes harm or damage to someone or someone else's property. Even though homeowners insurance is fairly comprehensive, there are certain exclusions that goes into it as well. In our area, the most popular exclusion to homeowners insurance is flood, but we'll discuss that in the future slides. Cost is one of the most obvious topics of discussion when it comes to any insurance product, not just homeowners. But it is the most difficult to determine because of how many factors influence the final price. You could purchase a policy online. You could buy it from a company that advertises on TV all the time, or you could contact an agent to get the process started. One question that you should keep in mind when shopping for insurance is, do I know enough about homeowners insurance policies to determine the best coverage for my home? Working with an agent offers deeper protection and gives you an ally to help you navigate claims if they do arise. Now let's talk about flood insurance. The biggest takeaway from flood insurance is that it is not covered under your standard homeowner's policy. It is important to find out early in the process if the home that you're looking at is in a designated flood zone. Listings may have this information, but you could ask your realtor or mortgage professional to reach out to us directly for a flood zone determination on the property. There are options for both federally backed flood policies and FIP policies and private flood policies. If you're applying for a federally backed mortgage, such as a FHA, USDA, or VA loan, and your property is in a designated flood zone, you will not be able to purchase private flood policy. Just one of the requirements that they have. Another somewhat technical question is, how much insurance do I need? I say technical because there are a ton of factors that goes into determining what the best coverage is for you. Some of those are listed on the screen. Location, what does it cost to rebuild your home? What would it cost to replace your belongings? What liability exposures do you have? Do you have a pool? Do you have pets? All of these are questions that we ask, our agents ask our prospective insureds to find the right protection for their property. In addition to the seemingly never-ending list of terms you'll hear when purchasing a home, there are a few important insurance terms to keep in mind as well. The market value is what your home is worth on the current housing market. Over the last few years, we've learned how much that could vary based on the proximity to cities, proximity to schools, the amount of land that the home sits on, and a slew of other factors. Replacement cost, on the other hand, is what it would cost to rebuild your home or an exact home or similar home to yours in today's market. Insurance companies care about replacement cost of your home and not the market value. This is an extremely important point to keep in mind when reviewing your homeowners policies. Going back to the discussion on price, there are a couple of things that you could do when shopping for insurance to find the best rates. Talk to your agent about combining policies. Some places call it bundling. Some call it multi-policy discounts. There are a ton of different terms to describe it. The bottom line to keep in mind, though, is if you have all your policies with the same insurance company, it is way less expensive than having it with different companies. The second part is to shop multiple companies. And the best way of shopping multiple companies is to find an independent agent. An independent agent is someone that works with multiple insurance carriers. Excuse me. They'll be able to present quotes from multiple companies without you having to make multiple phone calls to get what you need. Buying a home is already a long process. Don't waste your time making 5 phone calls to get 5 quotes. Find an agent, have them do the work for you. The second part of the discussion on price is how to keep your rates low. And the best way to do that is to avoid minor claims. I know we have insurance and it's there to protect us, but if it is a small claim, something that you could pay for out of pocket, it is best to not put it through the insurance company. It will end up affecting your premiums in the long run. If you're working with an independent agent, call them, have a discussion with them about what the potential claim is, and they will point you in the right direction as to whether or not to put it through the insurance company or pay for it out of pocket. They're there to provide you with advice and protection. Another way to keep your rates low is to maintain good credit. Insurance companies check your credit and use that as one of the factors to determine your premium. Now, I'm sure there's a lot on the webinar who are seeing stars from all the information that was just shared. Everybody here threw a lot of information at you. For me, you don't have to remember all of what was just said. The one thing to remember about insurance is contact an agent, preferably someone that works with multiple insurance carriers, and they'll help you navigate the murky waters of insurance and get you the protection that you need. Here's a little bit about the agency I represent. Metswood Insurance is one of the top-rated insurance agencies in New York State, with an office right in Hudson. Our other offices are in Chatham and Albany. And we focus on personal insurance, so homeowners, auto, etc. But we also provide commercial insurance for many businesses in Columbia County and surrounding communities. If you have any questions at all and anything I presented here tonight, please feel free to reach out to me. We're here to help you get coverage you need in the most stress-free way possible. Purchasing a home is already complicated enough. don't let insurance stress the process even more. Thank you for the opportunity to speak, and I'll turn this back over to our mayor, Kamal Johnson. Mayor?
Thank you, Nan. Great presentation. Let's get to the Q&A. I'll wait for everybody to kind of come back on screen. I ask that all the presenters unmute. All right, so what we have so far for Zach, can you please review again how interest rates affect property values?
Yes, and thanks for asking, Allison. So, so interest rates, how they impact affordability. So, it's kind of like purchasing a car. So if you're going to purchase a car that's $20,000 and you have an interest rate that's 4%, well, then you're going to take 4% of that $20,000 car and tack that on top of that, right? And Laura, correct me if I'm saying anything wrong. You're probably going to be able to explain interest rates a little bit better than I, but how that affects affordability is as that interest rate increases, then your affordability essentially decreases. And I believe the second half of that question is, while price appreciation is also increasing, how does that affect a first-time home buyer or buyers in general? Well, it's kind of like a double whammy. And it's a little bit like, now is the time. And I know you've probably heard that in the past and often. And I've been thinking of this challenging thought, right? We are in a seller's market currently, right? Because of, if you look at inventory levels, but if you look at where prices are going, where interest rates are going, those that have bought last year, those that bought 2 years ago, and I showed it in my slides, whoever bought a $250,000 home in Greene or Columbia County in 2019, their home is now worth $100,000 more, and their interest rate was 2.75%, and they're locked in for 30 years. So is it a seller's market? Because that buyer just won. You know, so it's an interesting way to think about it, but it's not going away anytime soon. It's not just this year. It's not just going to even be next year. And I think that it's a lot of what I kind of highlight, and there's some highlighted in my slides, but there's some other factors as well that I could also get into, but that's my summary there. I hope that answered your question a little bit.
Thank you, Zach. And if there's other presenters that want to touch on certain questions, feel free. I feel like we have like the Avengers of home buyers here.
Right?
We got a little bit of everything. The next question is geared towards Laura. You covered this a little bit in your presentation, but could you repeat it? Is 640 still the magic credit score number for home loans?
No. Well, it depends on your lender. There are some lenders, especially for FHA and USDA, your two government loans, or even VA. There are some lenders that will do a cap onto a credit score. So their minimum credit score might be 640. With guaranteed rate right now, we're at 580 for FHA, 580 for VA, and 620 for USDA. You know, when you go, I'm just going to kind of to mimic what Zach said. If you do have, like, I have two borrowers right now. They have a 584 credit score. One has a 584 credit score, and one has a 590 something credit score, both going FHA. Your interest rates aren't going to be the best, but you do get in a home, and once the rate does come up, you can look in, or once your credit score does come up, if the rates go down, you can refinance. To answer the question about interest rates, you know, I mimic what Zach said. The interest rates for this year, what we're hearing is the rates are going to go up 4 times. We're going to do a 4-time adjustment this year. We did hit an interest rate jump in the middle of January to February, you know, and as Caitlin and I were looking at, you know, we were trying to lock people in. Not everybody's ready to lock, but your rates right now are in the 4s. Does that mean that the rates are going to stay there? No. Does it mean that tomorrow we might come in and the market gets unstable because of the stuff going on with Russia and over in the Ukraine, does that affect interest rates? It does. Everything going on in the economy, everything going on in the news affects interest rates. Interest rates are tied to the bond market. So right now, I agree with Zach. If you do want to find a home, you can, I would get out there looking. I mean, I have originated I'm old. I think I'm the oldest person on this panel, for Pete's sake. But what I've noticed is, rates were in the 6s, and then they come back down, and then they go back up. So it's cyclical. It really is. So this year, like I said to a lot of people, the rates are going to be a little, we call it an unstable market. And it's right now we're running it around all the 4s, depending on the loan program, depending on your FICO, depending on what you're trying to do.
Thank you. And you're only as old as you feel. And you got a lot of energy. So the next question is, I'll stick with you, Laura. What percentage of the cost is recommended for a down payment?
So, and this is where I say to a lot of first-time home buyers, like if people want to go USDA, it is a 0 down payment program. And if you want to roll in some of your closing costs, you're bumping the purchase price. You just need to understand, if it is a pricing, you're in a, it's called the highest and best offer. There's a lot of offers going on the situation. Unfortunately, I always say to a lot of people, a seller's going to probably take cash first, then they're going to go into conventional financing, and then they're going to look at their government loans. So, I do say to some people, if you can part with a little bit of money, sometime offering a little bit of a down payment, that will help your situation. I always tell people to be upfront and honest with their real estate agent. And at the same time, I always say to people, you can, it'll come to you, just hang in there. I have a lot of people who have been with me for many months, and who look, and I run mortgage payments, and I want them to feel comfortable. But if you really want the true 0 down payment program, that would be VA if you're a veteran, or USDA if you're not a veteran. The easier one that I originate a lot of, is the FHA. That's the Federal Housing Authority.
Thank you. Coming over to you, Kevin. Can the inspector help the buyer know how much it costs to repair issues?
Sure. So as far as for that, so New York State has outlined a lot of different things, or I would say laws. It's a little bit more straightforward. New York State has outlined a lot of laws for things that home inspectors can't do, can do, or all in between. So as far as for that, like New York State basically says that we don't have to do that. But for me, it's the way that we've been able to kind of like position ourselves and to give the most value is that a lot of times we kind of go, I guess I would say, above the license law, right? To be able to provide that maximum value, and while still maintaining, while still being involved, or still kind of like being, what's the word? I guess following the license law. So as far as for that, home inspectors don't have to do that, and most of them don't do that. But as far as for us, we do that just because we want to make sure that we give them the most accurate, I guess, the most accurate assessment of the house. The other side of that though is that we don't really give estimates, just because, if someone says, how much is it going to cost to build this deck? One contractor might say 3,000, another contractor might say 6,000, right? Because it all depends on what they're charging for labor. So for me, if somebody's asking me, hey, how much do you think it's going to cost to build a deck? I might say, hey, look, for me, I think you're probably maybe looking around, let's say 2,000 to 3,000. But that all really depends on a lot of different variables. You know what I mean? So I'll give them a little bit of a ballpark. But then the good thing about what we do is we have a very extensive contractors list. So when we do that report that we run for the buyer, we're outlining everything, taking a lot of pictures. And then as we give them the report, and then we have them, if it's like a major defect, which is something that's over $1,500, then we're saying, hey, you should definitely get an estimate prior to closing, so you can actually get a firm number on that. You know what I mean? So I guess what I'd say in short is we do give numbers as far as for repairs, but we do defer back to the professional, because I look at myself as more of a generalist than an expert in really anything.
Yeah, I'd love to jump in there if I can.
Sure.
Kev, coming over to Al. No, go ahead, Zach.
Yeah. Just because mentioning quotes and repairs and how I also am involved a little bit of that when it comes to negotiation after we get that report, is exactly that. Like if there is a major defect, something maybe around like above 1,500 is what's kind of qualified as a major defect. Typically, while we're maybe negotiating a credit, or we would usually try to get an actual quote from that specialized contractor. Because like Kevin said, like they are experts in the inspection field, but they're not a licensed contractor. And contractors can be very specific in a specific niche as well, or depending on what the defect may be. So, that's a great thing about, using, Kevin's services and finding contractors and having resources and connections to be able to reach out to those people throughout the process. I have a vendor recommendation list as well. And that way we can get a speedy quote to be able to go back to the sellers and say, hey, this is the inspection report. These things came up. We would like to get a quote for repair. Once we get that quote for repair, then we can go to the sellers and show the quote for repair and say, it's going to cost $2,800. We would like that in credit come closing. Sometimes, I put it out there like we want the full 2,800. Sometimes they may just come back and say, we'll give you $1,000 or we'll give you half of that. And that's where the negotiation process kind of would begin after inspections, to give you a little bit of context, but yeah.
Thanks, Zach. All right, Al, coming over to you. This person missed the first part of the presentation. They want to know, are there currently any Habitat for Humanity homes available in Columbia County?
There are currently none available for new partner families. We are in the process of closing on 3 homes that we've recently constructed or rehabbed. We'll begin building new buildings hopefully sometime this year. So we'll be opening the application process for new potential home buyers hopefully later this spring.
Awesome, thanks. For Zach, are there issues with a title if someone added themselves to a deed and are planning to sell / rebuy out of state? And also if you could maybe explain title versus deed.
So the deed is the record of the home itself. It's gonna outline the specific property lines. It's gonna, and each deed is a little bit different, but it's gonna outline exactly where the property is located, and it's gonna highlight those that have owned it previously. That's what also a title report does. A title report. So the deed is that it's gonna state the property is XYZ and it's here, right? And the title is going to say, this property is owned by XYZ, or the deed says that, sorry, and the title is going to say that, but the property also doesn't have any liens on it. It doesn't have a mortgage, or it does, or it has someone that's claiming that it is their property, but the current owner, is saying that it doesn't. They don't. I want to take a step back. So the deed says that that's where the property is, and this is the owner. The title search and the title report will say that that owner does own that property. And if they're going to search to make sure that the tax records are correct, they're going to make sure that that person does indeed own the property. And that, depending on the title report search that you have completed, they'll go back even as far as like 40 years to ensure that the chain of that title has actually fallen into the correct hands. And that there's no one else claiming that property. And that's what's so important about doing a title search, is that you don't purchase that property and 10 years down the road, Mr. Smith comes and says, hey, this is my property. And then you're like, no, I purchased it 20 years ago. What do you mean? And then they say, hey, look, I'm on the deed, or hey, look, I have this, or hey, look, I have I still have a mortgage on this. So the title is essentially claiming that that property is owned by who it is and that everything is correct. And Laura, I know you're a little bit more knowledgeable about this as well, so I'd love for you to tune in. But yeah, that's
your
Yeah, I see
explanation
her
is
shaking
correct.
her head.
Yeah, you're right on. With the title is required if you apply for a home equity, if you're going to do a refinance, even if you're going to do a purchase, even if a buyer purchases a house with cash, then turns around like 2 days later wants to do a refi. The reason why lenders and everybody, banks, lenders pull title is to make sure there are no liens, whether back taxes are owed. The property basically needs to be clean, because a lender wants to be, you'll hear something about first position, second position. A lender always wants to be in first position. So if there's a tax lien or anything out there that would be in first position, that would jeopardize a lender's position. So the deed is I always say to people, the deed is the ownership of the property, and title is an extensive search showing the lineage, since it was built, who owned it, all the mortgages satisfied, or, what are the tax records, what are the property taxes, all of that.
well said.
Great. Thank you both. Laura, do you have to wait a certain amount of time after buying a house to make a big purchase, or to change, like changing jobs or buying a new car?
Wait, is the question after you bought the house or you're looking to buy a house?
You should probably answer both.
I'm
I think it'll be
guessing
helpful to hear.
after buying a
Questions
house.
for after.
So after you buy a house, you can do what you want. There are no mortgage police. If you want to switch jobs, if you want to buy a new car, everything, just realize though that when you get a mortgage, much like think about this with the credit slide that I had, and it happens to everybody. It happens to everybody. Your credit score is going to tank. It's going to drop, because all of a sudden, here's a $200,000 liability. Here's a $200,000, and you owe $200,000. So you need to give it a couple of months to let the mortgage report, and then the scores start to come back up. But if it's post-closing, you can switch jobs if you'd like to switch jobs, buy a car. Just make sure, get settled in your mortgage payment first. If it is prior to closing, please tell your mortgage person you're doing that. I cannot tell you, we are required to, prior to closing, the day before closing, and I have sat here and I'll go, what? And we will verify that the person is at the job, and guess what? The employer says so-and-so quit. Great. And what the question that I get when we call the borrower and say, did you just quit your job? Did you just move jobs? Did you change jobs? Well, we didn't think you were going to find out. We're like the FBI. We find out. We have to, we really are. So then what happens is we have to get with the new employer, verify your income. We might have to delay the closing, but it stresses me, and I'm old. It stresses me, and I'm old. But and if you buy a car, you need to tell us, please. I've had people go out and buy brand new cars, then they don't qualify. I didn't know. There you go.
We don't want to stress out, Laura. All right, so the next series of questions, I'm going to ask the presenters to answer them in a rapid fire way, because we're running out of time and I want to get as many questions answered as possible. If there's any that are not answered, we will collect them all so that we can answer those. I'll send them to all the presenters to answer, and then we'll get them to people to view. All right, so for Kevin or Laura, why do FHAs get bad reputations for inspections?
I'll take that first. Even though Laura should, really. I think they get bad We get the FHAs get bad names for inspections because the appraisers could be a little bit more tougher on the FHA inspections. I guess case in point, peeling paint, broken windows, fixer upper house.
That's correct. I mean, FHA is not a bad loan. I originate about 45% of my product is FHA. I like it. It is a great first-time home buyer. What I say to if you're a good real estate agent like Zach, he knows right out of the gate that if he has an FHA buyer and the entire house is chipped and peeling paint, we might not want to show the buyer that house. They're all about safety, chipped and peeling paint, handrails going downstairs, safety on deck. So a little kid cannot, if you're out on a deck, it has to be up to compliance and code. So FHA is not that hard. They have relaxed their guidelines over the years, but it is all about safety.
And if I can chime in, a little bit of context as to like how that can affect. And I think every buyer has different priorities.
Rapid fire, Zach. No, go ahead.
Everyone has different every buyer has different priorities and things that they care about. For as an example, Laura and I just finished up a deal with a client of ours, and he was going FHA. And there was one citation that came up in this FHA. The rest of the home is immaculate. It was very well done. The owner was a contractor. Everything was done to a T. But the garage, which was an older garage, and it's a detached garage on the other side of the property. It had chipped and peeling paint on the garage door and on the entrance door to access it. And the appraiser called and cited that. Now we're in the middle of winter and you can't really paint outside. So it caused, and our client didn't care about chipped paint on a detached garage across the property. Later on, he planned on repainting it, down the road anyways, but now it caused a little bit of a difficulty to get it closed because now we had to get a little bit creative on we can't paint. The seller's a little frustrated. Now it's taking a little bit of time for us to get back to them and figure out our game plan of action. And so we got a little bit creative, and this was a solution. I don't want to get too far into it, but we found a solution. Rather than painting, we would actually do what's called an escrow holdback, and the buyer would hold back a certain amount of money, a few $100s, give or take. And we'll be able to close on the property. And then when comes spring, the buyer will be able to make that repair, take a couple photos, send it over to Laura. Laura will get it to the appraiser, and the appraiser then will say, great, there's no longer chipped paint. You can release the funds back to XYZ, whoever it was that had that escrow holdback. So there are some creative ways, but that's just an example of how an FHA loan could bring up a citation, cause a little bit of a hurdle more so than maybe a conventional loan, where conventional won't even bat an eye at some chipped paint on a detached garage.
Awesome. Anand, when is flood insurance necessary, and does it depend on where you live?
That one really just comes down to where the property is located. And the way we do it is to to get a flood certificate on a property. So if obviously the address of the property that you're going to be looking to purchase. Like I mentioned before, just talk to either the lender or your realtor. Have them reach out to one of their partners, their insurance partners. We have access to different insurance carriers, flood insurance carriers, and can find out the exact flood zone or the flood zoning for that property. That's pretty much how it works all the way through. I get calls from Laura or some of our realtors all the time to figure it out, and we do it very easily.
Thanks, Anand. All right, we're coming back to Laura or Zach. If you refinance, if your credit score improves, do you have to put another down payment on your new loan?
No. You're going to go off, when you refinance, you own the property. We will go off of the equity of the property. So you do not have to do another down. You do not have to do another down payment, and you can roll in. A lot of people with refinances will roll in their closing costs. that's the name of the game. I've done a refinance for a borrower. He had a home. He had a lot of credit card debt. He said, you know what, did too much over the holidays, and I also would like to put in a new kitchen. We were able to do a refinance for him. We paid off $1,200 of credit card debt a month, plus he got $30,000 to do a kitchen, and his mortgage payment went up $100. So refining is great if you own, but you don't have to do a down payment.
All right. Last question, and anything that we didn't get to, we'll include in a Q&A to put on the city website with all the answers from the presenters. So last question is, are there third-party affiliated with the whole process of buying/inspection insurance? Meaning, can anybody take your house if you can't afford payments due to certain detriments?
Yes. There's something called tax foreclosure. If you don't maintain your taxes, this happens to people. This happens to people who don't have a mortgage on their home and they're having a hard time making their taxes. Or if they have a mortgage on their home and they haven't escrowed, you have to just be careful of, the county sooner or later is going to want the money for the school taxes and the property taxes. So you will hear that I always say to a lot of borrowers who are very delinquent and being like, I don't know if I want to refi, we better refi. I say, you better do this before that property goes into a tax foreclosure, which means the county is going to take your house. I think that might be the answer to the question.
Great. I want to thank all of our presenters, all of our viewers on both streams. Thank you guys so much for tuning in. This is hopefully one of a series of events we'll be having on home ownership. Hopefully the next one we can do in person. And I want everyone to have a good night. Please look for the rest of the questions to be answered on the city's website and on our social media. This event is going to be recorded, so it'll be available for you to share and to re-watch. Thank you, everyone. Thank you to our presenters again. Have a good night.
Thank you.
Bye.
Thank you, everyone.
Thanks, Matt.